Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, April the 15th. I'm Eric Wilkinson, and you very well may recognize me from mainstream media where I've talked about everything from economic to geopolitical and then layer on top of that some market analysis. Well, I do that same stuff in these daily market commentaries, but I layer then on top of that option strategies I find based on that economic, geopolitical, and market analysis. What I'm here to do is teach you guys all these little nuances about options and how we can implement those into our portfolios. I'm not here to give you a trade recommendation. I'm here only to talk about my own trade. So please take that into account with your own portfolio and your own risk parameters, okay? All right, without further ado, let's get on with the overall markets. We've got right here crude oil coming off again today by about $1.25-ish. Tomorrow we do get crude oil inventories. I expect those to be a build because this whole OPEC deal isn't probably going to start affecting these inventories right away. As a matter of fact, they might not affect it at all. We talked about this, that OPEC Plus said that they were going to reduce output by 9.7 million barrels a day. The United States, Brazil, Norway, and Canada are all going to reduce their output by 3.7 million barrels a day. That all equates to about 14.5 million barrels a day. Also, that is about a reduction of half of what we've seen in lack of demand. So about 30 million barrels a day lack of demand happening. You think about it, everybody's sitting at home, nobody's driving. I haven't filled up my car in I can't tell you how long, and I was doing that probably close to once a week. And I work from home. That's just driving the kids around to their different events and their different games and stuff like that. Sorry about that. Somebody making a ruckus and the dogs noticed. Anyway, so with that being said, that's a major lack of demand going on, and people that are non-essential workers aren't driving either, and then they're also on top of that not driving their kids around. So really lack of demand. We see that manufacturing plants are shutting down as well. Non-essential manufacturing, that's shutting down. That's a major demand driver of crude oil, and that's not happening here or across the pond. So I continue to see crude oil start to slide here as we're moving forward. And then gold making another new all-time high here, 1788. You know, this gold is being driven by fear, you guys. So a lot of people going out there thinking the dollar is really going to be weak as the Fed continues to crank out those printing presses at unprecedented levels we've never seen before. So, but something to note, I've had this 261 Fibonacci extension up there forever, and look at that, we went up there and tagged that. So you know, I debunk Fibonacci quite often, you guys, and I'm not going to lie, that is something where I feel like you know, it's the tea leaves, but if most people are looking at it, it has a tendency to come to fruition. This is a perfect example of that. It found a resistance level and bounced on that this morning. All right, moving on to bonds. They're trying to make a little bit of a move, unchanged for the most part, as they're making a little bit of a push higher here. You know, every time we see this market come off, it really is Fed coming in and buying, supporting this level. We talked about this yesterday, I think already, about $6 trillion being jammed into this market. So the Fed is supporting these levels. They want to keep interest rates low. So think about that. It's the teeter-totter effect. Interest rates go lower, that means bond prices go higher. Well, they're trying to support lower interest rates right now. Get those mortgage people out there doing some business, get home buyers comfortable with these levels, and they're going to be supporting that. All right, the VIX is off a little bit despite the fact that we're seeing more and more weakness. Actually, the Dow Jones is starting to make a comeback since I started preparing for this. We were only up about 350 points after being up over 600 earlier today. So it's still moving back into the right direction after seeing those slides. We'll see that happen over in the E-mini S&Ps. Now look at the Nasdaq gapping there because we forgot to put on our extended hours trading, but nice move in the Nasdaq yesterday. We did finish near the highs of the day, but it was making it look like we had another topping pattern. Looked like to me that we were going to start rolling back over. Well, today, no confirmation of that whatsoever, with the Nasdaq up almost 280 points right now and blasting above the value area high. Now, something to note here, you guys. You know, we talked about valuations quite a bit in the past, and I had been saying that I thought we were getting overextended when we were making these rallies. Now, of course, I didn't foresee the coronavirus really causing this major sell-off, but I was expecting more of a correction to get some of these high flyer names back in line with some of the realistic valuations. Well, one could say that these valuations right now for a lot of the companies in the Nasdaq are getting a little bit long in the tooth as well, because we've had a shutdown. You know, this is a future, we are future expectations, but you know, unless that you think that this economy is going to come out of this gangbusters, it seems like this could be a little overdone for some of the valuations. Now, we are just getting into the thick of earnings seasons and earnings season, I should say. I don't think that the earnings numbers are going to mean anything as much as I have in the past. It's really going to be about these companies' forward guidances. So that's what we're going to really be focusing in on. Something to note with the Nasdaq, I think it's just getting a little bit overdone to the upside. It's good to see, though, that the investor is willing to take some of these higher risk assets into their portfolio, which is what's really driving this. Also, those shorts getting squeezed right now is perpetuating this upside in this market. So we talked about this. Also, the market with the 200-day moving average moving across here, we talked about that if we sustain much of downward pressure too long, we were going to start seeing the 200-day do something like this with the 50-day. And as soon as you get that crossover right there, that becomes a very bearish signal. So that is not looking like it's going to happen at this point. So that seems to be out of the picture, and don't have to worry about that as well. So we don't want to see the 9-day moving average crossing over either. So didn't really mean to put that on there, but to correlate it with that 9-day moving average color. So I don't think that we're necessarily going to see that moving forward, at least at this point, starting to peel away from that. All right, E-mini S&Ps are moving higher again, up 64 points. Let's just go straight to the breakdown on this. This is where I was talking about. We started getting ready for this and had this bit of a reversal going on, and you know, you can see this high, I should say, was created during the intraday. So that is a solid number. But as soon as we came out of this, market started acting a little bit weak as we were selling off for the better part of the morning, starting to get that bit of a reversal, kind of bouncing off of that 9-day moving average. Now we talked, this is actually a 9-bar moving average. It's not a 9-day because it's on the shorter term, but that shows short-term bullishness as long as we can stay above that. And we've been doing that for the last several days. So that is a very bullish sentiment going forward. All right, a couple of things that I've done. Gilead. I went into Gilead because I was looking at adding some of this to my portfolio for a while now. We have kind of created a bit of a trend going here where, although we've seen a lot of market movement in this product, it has stayed in a trend and stayed above that 50-day simple moving average. So I'm going to play this to the upside, and by doing that, I'm still taking advantage of, as we can see down here, the high implied volatility we have going on. It's still elevated. It's well elevated over historical. Yes, it has come off a bit from recent highs, but you know, I think that the market could continue to settle down here, continue in this trading range, and volatility starts to come out. All of those things being equal will help me out with this trade. And I went in and sold the May. I'll write it out. The May that expires. The May that expires on the 15th. So the May 15th expiring. And then I went in and sold the 65 puts. All right. And I sold those 65 puts for $1.05. Sorry, I'm being very tentative here. For $1.05. It was basically the low of the day in these puts when I got those. Printed the new low. Always hate doing that. Everybody would rather sell the high, right? And buy the low. Well, I ended up selling the low when I entered this trade. So that being said, those 65 puts are down here below. That's a little low, but that's where my break even is right there at around 64. So I'm below where the point of control is. So that, could act as a magnet as we get extended. One thing we're noticing here is that we're starting to build out a nice volume node in and around here. So we could continue to say we're going to trade along in the 75 range now for the foreseeable future. That's fine for this trade. As long as I get the volatility coming out, that will help me out. And if the market continues to move in this trend, then I will be more than happy to stick with that. Now, remember, right down here is around where the broader markets were taking those tanks. That's where we started that major sell-off. Well, in that time, Gilead has outperformed the market there. Now, whether or not we see a sector rotation out of Gilead because, let's say, coronavirus starts ebbing a little bit, we start flattening that curve. Well, I still think that Gilead is going to do very well because of the massive push to PPE, which is personal protective equipment, okay, which is used a lot of times in the medical industry. Well, it's starting to become more of a thing in and around the rest of us, all right? So, and the drug makers and stuff like that. So this, I think, is going to stay at elevated levels for some time. And if not, then I would be happy to add some Gilead to my overall portfolio, especially at $64 a share. You can see, yes, that has been the major area for the last year, 2019, and then started getting this move on the corona fears. But at the end of the day, having my break even at 60. Right around $64, which is actually $63.95. That's a pretty good opportunity in my eyes. Does not like me drawing the line down like that. So all those things working in my favor. Like I said, we've got high implied volatility, days to expiration, inside of that 35 days or right around that 35 days to expiration, which is the wheelhouse for selling options I talk so much about in my webinars. And a strike location fitting all in line with all of my rules that I talk about in those webinars. So please check those out at protraderstrategies.com. If you aren't familiar with that and want to get a little bit of a more deeper understanding of this strategy, check it out because I go into detail on all of the things in and around setting up the short puts for implementing into a portfolio around your given market assumption. Mine being positive in this one. All right, so without further ado, got one other thing I want to talk about here. I did try to, I'm trying to do this ratio call spread against my longs in EA Sport. I'm long a few EA Sports because of, I believe that kids are like pounding on the EA Sports all day long, and that means that they are probably doing upsells and purchasing things through those games. That being said, I've gotten a nice move. I said I'd be happy to get out of some of these at 115-ish if I made a 52-week high. I was looking to do some covered calls or cover some of my risk, maybe thin out this position at the 52-week high, but The markets in there are just absolutely horrendous, to be honest. Really wide. At one point, they were $1 wide on the bid offer, which is just terrible for a $100 stock. My rule is about 10 cents. So I tried to put it in at my price level. It has not even gotten close to it. One of the rules I said you can't break in building this strategy out was to do it for a debit. And right now it is trading for a debit. And I was looking to buy. Actually, I did the... because of this move today, I was able to go out a little bit further. So I was buying the 115 calls and looking to sell the 120 calls twice. And that selling that extra call in there, making that a ratio call spread, was expecting to be able to finance this entire trade. So, and if it goes above 120, I'd be happy to have that called away from me. Heck, I was happy to have it called away from me at 115 before this move happened. So at 120, if I could do that, it would even be better. In the meantime, if it doesn't and this starts topping out, then I lower my overall cost basis on what I paid for this underlying at the onset. All right. Don't usually do this around. I don't usually do this around an earnings there, which would be the time frame I'm looking at here. But having said that, be happy to get out of that trade even $5 higher on good earnings. I think a lot of that is being priced in. People are starting to wake up to my theory on this already. So without further ado, that's about it. Those are the only things I've done. It does not look like I'm going to be able to put on that ratio call spread in EA Sports at this time. So I'll keep you guys posted on that and how this is working out going forward. But I'm not too confident I'm going to be getting that one today. So, you know, it is what it is. That's what happens when you have these extreme volatile type markets. The markets get really wide because the market makers don't want to take any risk. So, all right. Guys, go over this disclaimer really quick. You know, it talks about past performance of any trading system or methodology is not necessarily indicative of future results, and we are an educational company just trying to help you guys on your platforms to increase that overall yield in your portfolio. All right, that's all I got for you. Other than, if you can't take that, take it easy.